this now perhaps really puts trade on more of the center and even back burner for the markets, does this not?
Oh, I agree, Dom. You're absolutely right on that, and I think the administration is going to be touting this phase one deal right up through the election. So we're going to hear a year of this. Now, anything past this, though, we're still going to have some pretty big issues with China. The U.S. will have big issues with China, particularly in intellectual property. But it wouldn't surprise me if the president kind of defers talk about these other bigger issues that are harder to solve until after the election.
So let's talk about whether or not this does set things up decently in terms of the election cycle coming up. We know that the markets are looking ahead to that as well. How much will now this particular development go in favor or against the markets as we head towards November?
Well, you know, in the presidential election cycle, the fourth year of the cycle, if you look back through history to 1952, according to the Stock Traders Almanac, the Dow is up 10% on average when a sitting president is running. And the reason for that is because there's not a lot of uncertainty. Whether you like the president or not, we pretty much know what we're going to get. And so if phase one is in fact signed tomorrow, I think that's a great backdrop for stocks as we go through the rest of the year.
All right, so a great backdrop for stocks is also about what's happening with the Fed and its situation here. It appears the conventional wisdom is that during these fourth year of a presidential term, the Fed pretty much stays on hold. Is that something we can expect this time around, or are we expecting perhaps even rate cuts this time?
You're absolutely right, Dom. The Fed did their work last year, and because they want to be on the sidelines. They don't want the president to be running against the Democratic candidate and the debate being the Fed being part of that debate. So they would prefer to do nothing. Now, of course, wild cards can get thrown in there. What if the U.S. economy suddenly falls off a cliff? Now, I'm not saying that it will, and hopefully it won't, but that's a wild card. The other factor, you know, the Fed's been saying they won't raise rates until inflation gets above 2% consistently. We got CPI coming out today. What if we get an overheating economy as a surprise? Once again, I don't think that's going to happen, but those two things could force the Fed's hand through the rest of the year.